Heidi ho, everyone, and welcome aboard. It is the Sunday market update as we zip around the world as usual and take you to places very, very shortly, like New Zealand, that wonderful land across the ocean from where I sit to you in Tasmania, Australia, just across there somewhere. Here's New Zealand, and we'll be joined very, very shortly by Julian, who will take us through the big picture stuff and what's happening around the world in the market scene. We'll then go to Malaysia, where we'll be joined by recording. Most of the guys joining us by recordings today, because of their commitments in other places. We'll be joined by Shukri, who will talk us through the crypto market as it stands at the moment, what we should be looking for. Then we'll go to Singapore and check in with Lloyd and see what the indexes around the place are looking like. We'll then go to the US of A, again by recording, where we will have a little chat. Well, he'll chat to us, really. That will be Gordon, who will take us through his little segment of markets, in particular, the indexes that he looks at, and probably he'll have a look at a couple of currencies as well. And then, of course, I will come back and wrap the show with my little technical overview of what I see in the markets, which very, very interesting, I thought, this week. I do not have one of the normal flags that I put in the market that suggests to me there may be a little bit of change. I saw 4 only out of 29 currency pairs that have at least pause through the week, or at the end of the week anyway. 25 of them are carrying momentum. Interesting. Will that be a trend that continues for the next week? Good question. One of the people who have something to say about that joins me now, and we do go across the ditch and say a very, very good evening to Julian. G'day, mate. How's it going?
Hey, Geoff. How are you?
Look, I'm okay. I'm a little bit I don't know. I'm getting educated. I'm now up to the 15th letter of the Greek alphabet, and that seems to be holding sway over the world at the moment.
Yeah, I think some days the newspapers like to find a reason for something to happen, and maybe Omicron was maybe a catalyst, but I don't think it was the reason the market was unwinding. And maybe we can have a quick look at that and just remind everybody where we came from. Look, and for those of you that have missed it, on my Trader Cafe a few minutes ago, we've just spent the last 45 minutes just going through the markets and really focusing on the sentiment cycle and whereabouts in the market, in the terms of the cycle, a lot of the markets are that we normally look at, just to get a feel for where the opportunities are. And there's a couple of really interesting opportunities out there in terms of, maybe the world isn't completely horrible. Others, I'm afraid, looks like we're just starting moves rather than ending them. So it looks like it's going to be a pretty exciting 2 or 3 weeks. So, Geoff, if you'll allow me, I'll carry on talking from here and hopefully give the listeners and the viewers some of the way that I see the world right now.
Not only will I allow you, I'll nestle myself back in my comfortable chair and listen to everything you're about to inform us of. Thank you very much, George.
Cool. Hey, thanks, guys. Look, I'm going to start with the screen share because this is very important we get straight into this. First thing I want to share with you guys is this chart. This is a chart of the volatility, the VIX index on the S&P 500. Now, what you noticed about that is the huge spike in volatility we had in March of last year. What we're seeing at the moment is not really considered to be a spike. We had one in the beginning of the year. We've had a couple since then. The market's sort of moving, but really hasn't done it. So if you think volatility is pretty rough right now, you ain't seen nothing yet. There's still plenty more that can come. And I think that's really the key message I have for this in some of the markets. If we just move off the looking at the volatility index to go and have a look at the S&P and what it looks like, this is, again, just to bear in mind, this is a weekly chart. You can see we've now had 2 weeks in a row down. Well, that doesn't happen very often. Normally, when we've had 2 weeks down, if you go back and look in the past on an analog basis, there's only been 1 or 2 occasions where it's got a bit more rough than that. The last time was unbelievably back in October of 2020. So more than a year ago, where we had the market declining for more than 2 weeks. However, what I want you to bear in mind is where we've come from. For those of you who've been following this market, you can see the rally. We set off earlier on in 2020 in March at 2,200. We're now up at 4,500. So it's been an amazing run for anybody in stocks. And if you go look at the NASDAQ, it's even more spectacular. What we're seeing now is you can see how that volatility is picking up. Look at the size of those bars compared to the size of the other bars. So here's what we know, right? When the market settles down is when everybody is bored of stocks and doesn't want to buy them. When the market is volatile like this, right? So what I mean by that is when the trend is over, the market goes into a trading range at the bottom, volatility comes down and it collapses, right? While we're in the trend phase, of moving from one price zone to the second price zone, we see this high volatility movement, especially in the indexes. But look, let's have a look at a couple of our old friends. So here's Tesla. You can see immediately. Look, I was doing this chart with some of the folks earlier. There's the failure when it tried to reach a new high. We've had a secondary failure here. The last 3 days have been pretty sick for the old folks at Tesla, but then it is worth $1 trillion, so I'm sure they can manage. What worries me is there's a gap below, and then after that it's fresh air all the way down to about the 700 mark. So we really have to hold this major support at around about $1,000. Otherwise we're heading for the gap. Otherwise, if we miss that as well too and we close below that gap, we're probably looking at more significant moves. So this is not the end of a move here, right? This is maybe the start of the next big move. And maybe in this instance, it's not up, it may be down. So just bear that in mind. There is no end here. Where there may be an end is in the oil market, just in terms of, again, we're seeing significant volatility. However, when you unpick this and you look at it on a 4-hourly chart, you can see the 3 main waves of sentiment coming down to a new low, which got immediately bought on Friday or Thursday, I think it was, Friday morning. And the market actually performed quite well following that. So that major low we saw, let's call it a Thursday low, that major low we saw on Thursday for me is then signifying that maybe for the short run, the oil market has had enough going down. And bear in mind the prices we've got right now, the spread between the 1-year price, so that's the price in December of next year versus the price in December of this year, has completely collapsed. It was up at about $8 or $9. It's now trading down at about $2. Okay, so that's what we call the backwardation has completely collapsed. We're not in contango yet, but I think all those risks of supply problems in the oil market have come out. So I still look at this and I go, okay, well, knowing all of that, we've had a significant sell-off. The market has relocated. I am fundamentally bullish on the oil market going forward. Is this the right time to buy? And we still know the answer to that is from a seasonal perspective. No, wrong time for seasonals. However, we've only got another 2 to 3 weeks to wait and the seasonals start to kick in. So 2 to 3 weeks is a lifetime in the oil market. For the time being, on a short-term basis, my sense is there's a potential for a bounce here, a more extended one, taking us back towards the 74, 75 level on WTI. And obviously you can do the same numbers for Brent. You guys can look that up. And if not, if we just hover around this point, then it maybe suggests continuation to the downside and we're not finished yet. So this is how we're going to check this stuff, right? So where you see the market going sideways for a while, you then look for the moves out of that range, either up or down, to give you a clue about the future direction. I think the safest way to say all of this and describe all of this is saying you have time, if you're a buyer, pretty much in every asset market in the world now. The times when it's like, oh, I've got to buy because otherwise I run the fear of missing out. I don't think there's FOMO anymore in this market. I now think we're entering a different phase whereby capital preservation once again is becoming a very important friend. And once again, you've got to play the technical to try and find the right place and the right trade location to put some of your trades and, dare I say it, some of your investments on as well too. These are some of the things I'm seeing which are really clear right now. To me, Geoff will have more view on the currencies. I'm really struggling with getting any major opinion about currencies right now. They seem to be fluctuating with the stock market. I guess I would mention the dollar index, and maybe if we just look at that on a daily basis, and maybe even we go further and look at it on a weekly basis, which may be slightly more appropriate. This is still an uptrend on a weekly basis. However, have we gone far enough? I'm not sure. I think most of the money has been made in the dollar index now. I think from here on in it gets a bit more tricky. And again, I think we might just consolidate for 2 or 3 weeks as well too. But apart from that, folks, I can't see anything else. So in summary, stocks, I don't think we finished what we started there a couple of weeks ago in the stock markets. The oil market, I think, is looking a bit better, and maybe it's going to hold into support. The currencies I'm not too sure about. And then finally, for those of you that may have missed it, right, the moves that we saw in Bitcoin and in Ethereum over the weekend have just been unbelievable. So there's the weekly chart. Look at the size of that weekly bar. It's about as big a bar that as you ever get. Okay, on the dailies. One of the things I think that's really important about this, if you look at the price action, this price action has been negative now in Bitcoin for the best part of 2 to 3 weeks. So is it a surprise that we finally took out all of these support lines and just had a bit of a collapse on yesterday? I know we've hung in there today. So if you look at the 4 hourly chart, you can see how this has bounced back. We may be rolling over. If you're looking for a sell zone, this is probably the area. Use whatever techniques you've got. Maybe we retrace down to here to find out if there were real buyers at all at the 42,000 mark. But long story short, you can see from what's been happening, this has been trading poorly. And all that's happened is on Saturday, somebody's finally said, that's it, I've had enough, I'm selling, and they've created a bit of market movement. When you look at Ethereum, it's trading a little bit better, but it still doesn't trade like a great market to me. You know, we've had the sell-off, we had one, you know, we're trying hard to bounce this, trying hard to bounce it, then another big down day. Then we bounce it big to go back and have a look at the old highs, and then we've just thrown up and just puked straight away from there. So conclusion is Ethereum trades pretty poorly too, but it trades better than Bitcoin. And we'll see what happens over the course of the next week or two. The volatility in the cryptocurrencies is absolutely alive and kicking. If you want somewhere to go which isn't too volatile right now, I probably head to our old friend gold, which is a little boring. Above 1760, it's great. Below that, it's not very good at all. So that's my roundup of the world. And the reason why I haven't mentioned a single economic figure is it makes absolutely no difference whatsoever at the moment. Knowing what's happening to Omicron might be slightly better. Knowing that it's a worse or it's a better variant would be slightly better. But I don't think we're going to get that news on a Sunday evening. That would be a bit weird. So probably sometime next week. I think it normally takes 2 weeks for the cultures to mature to the point at which they can get a feel for it. So sometime next week, we're going to know. And folks, look, maybe that will be the sign and maybe the market will bounce. Going to new highs, I think that's a bit of a stretch. I think we've already set the pattern for the next few weeks in place. But who cares about economic fundamentals when there's all this stuff going on? And by the way, the fundamentals that have come out the last 2 weeks have almost universally been worse than people were expecting.
Mate, one thing that I find fascinating is trying to get some form of correlation or some form of guide as to how Bitcoin in particular, but the crypto market in general, it actually, does it tag onto anything?
That's a great question, Geoff. Look, I think I think there's 2 ways of looking at this. People have said to me, oh, look, Bitcoin's the new gold, right? Or cryptocurrencies are the new gold. So if you want to express the inflation view, you go and buy cryptocurrencies. Well, look, the reason why people buy gold is they buy gold as an inflation hedge and for safety. It has some of the lowest volatility in the market, even almost below the volatility on treasury bonds. So it really is considered to be very, very boring. When it trends very strongly, but most of the time it doesn't really go anywhere. And it's designed to not do anything. That's sort of the point about a safe haven, right? It's designed to not be that interesting. When I look at cryptocurrencies and see volatility of 10 or 15% in a day, I'm not considering that to be anything like a safe haven. I think it's not at all. However, I do believe that a lot of money that may have gone into the gold market has gone into cryptocurrencies on the belief that it is a safe haven and it's a protection against the great Satan of inflation, right? That seems to be going around the world, and the currency debasement that appears to be going on around the world. And maybe on that basis, there is some reason why it should then trade similarly. But to me, it's a very high beta. It's a very high risk market, and I think that it varies. Sometimes it goes up with all the stock markets. Sometimes it goes down with all the stock markets. Sometimes it goes up with all the currencies, and sometimes down with all the currencies. The short answer is, I think it does its own thing, and you trade it as a completely separate asset class with a backstop, right? With a backstop to say, hey, if the world's coming to an end, then probably cryptos will come to an end as well too, right? So I don't mean that in anything other than a melodramatic, metaphorical sense. So there's a real thing that when people start to sell assets, they sell the good with the bad, and if you have a significant profit in cryptos and you're losing money elsewhere, then you start to sell everything, right, including the cryptos, just to get out. So that's when that correlation of one starts to hit. But until that point in time, I think that there isn't really a correlation with other markets. Maybe there is from time to time, and people sort of tag onto something, but the reality is no, not really.
Yep, very happy to leave it up to the experts and ride on their coattails. For the crypto market, I'm happy to invest in the people that trade it rather than trade it myself. I think it's a very, very difficult thing to grab hold of. But mate, thank you so much as always. Great insights, and I think maybe we're back to the sentiment cycle.
Yeah, look, it's it's really interesting. You can spot, again, I encourage everybody to go to the video I've just done. You can spot some of these patterns in the market. You can see from the headlines of what people are saying. You can recognize this. Okay, it doesn't look, 2021 will go down as being, if there is a bear market in 22, more of a global generic bear market in asset. Then 2021, they'll identify the May 21, March 21 era as the time when it actually rolled over, because that's when the euphoria got to crazy levels. Just even a really simple stat, right? In the States, this year, $900 billion has been invested into the stock market in the States. That is more than the last 19 years combined. So if you want a sign of enthusiasm or fear of missing out, then that's a front and center one that you can just look at anytime you want.
Take a picture and put it in the dictionary, right?
Yeah. That is not a timing. It's not a timing trigger. It's just an overall market sentiment bias.
All right, mate. We'll let you relax for the rest of Sunday evening. What's left of it, an hour and 43 minutes in your case. Enjoy it, and we'll look forward to catching up again next week. Have a good one, mate.